If I told you that there was a stock that was down 80% that was expecting over $8 billion in revenue this year, would you take a look at it? Well, that is what Coinbase is at right now. It's down 80%, and their earnings are expected tomorrow. That is Tuesday, May 10th, 2022. And I'll be reacting to those earnings live at 3:45 p.m. Eastern time. So make sure that you're hitting that subscribe button, hit that notification bell to get notified when I do go live for those reactions. Coinbase is an interesting one. The stock, as I'd mentioned, is down 80% from its highs. The estimated earnings per share at 17 cents. They're expected to bring in $1.48 billion in revenue. And for the year, the outlook is around $8.22 billion. The interesting part here, though, is if we take a look at some of the other, investing platforms, such as Robinhood, for example, and I by no means am comparing Coinbase to Robinhood because Coinbase is profitable. And in fact, Coinbase is one of the few IPOs that came public last year that were profitable. They didn't have to worry about reporting for losses and interest rates and everything else. And that actually should make it look attractive, right? But when you consider Coinbase right now, it's still at a ridiculous multiple. Yes, it's down 80%, but I'm looking at the forward multiple right now, and it is trading still at 73.5 times next year's earnings. And in an environment where we're looking at a slowing of growth, in an environment where we're seeing trading activity really come back and really pull back some, Coinbase is one that I think is probably one that I would at least try to avoid, at least going into earnings. I know I just said at least a lot of times, but you get what I'm saying. Let's take a look at the chart right now. And as you can see, it is really kind of sold off significantly. Yes, it's oversold. You can make a lot of arguments to that, but I keep coming back to the multiple. This stock obviously was way overvalued when I'm going to call him out. When Jim Cramer thought this was a buy here on IPO day, and it tried to retreat or try to return to those highs in November of last year at 367. And you can see that it has just been a long way down since then. It's unbelievable to think it is down 80% since November, yet here we are. And I'm here to tell you that I still think that there's part of me that thinks that this is overvalued because of that multiple. It's just so ridiculously high. And despite all of that, guys, when you look at how this reacts to the price of Bitcoin, that's the real story here. It's unfair to Coinbase that, as well as this company is ran, that it just trades in correlation to whatever Bitcoin does. It makes sense, I think, to people who don't really understand it. And I think it even makes sense to people who do. However, looking at it, the company is actually in really great shape despite some of the slowdowns. I'm not confident in Coinbase coming in and knocking it out of the park. Maybe they actually come in and beat on earnings per share, but I imagine that their guidance actually kind of comes in lower than expected because of some of the trading activity that we've seen. I wouldn't say nobody, but trading activity has slowed significantly with fiat currencies. I just can't imagine that there's a lot of people coming in here and trading in and out of cryptocurrencies at a relatively decent clip, which is where Coinbase makes their money. I'm not here to say that I think that Coinbase is absolute trash. I'm just here to tell you that I think that exercising some caution certainly makes a lot of sense. It hit all-time lows today, but it's been hitting all-time low after all-time low for the last several weeks. So until we see this actually form some sort of bottom, if you buy here, in my opinion, it would be just like trying to catch a falling knife. I'm sure you've heard that metaphor used many times before. This is a textbook example of that. And just like some of the other ones that I've been reporting on, as far as stocks that have high multiple or report losses, I think that you could certainly wait till after earnings come out to actually make some sort of buying or selling decision on this. In the long term, I think Coinbase is an excellent stock, and I think the company is doing really great things as far as growth is concerned. I just don't know right now if in this environment that you could constitute buying something that's trading at 73 times next year's earnings. There are exceptions to the rule, and I've talked about those before. Airbnb comes to mind when we're talking about that, or a CrowdStrike, stocks right now that are actually in high demand. I just don't know if Coinbase fits that bill as far as demand is concerned, but I certainly would love to hear from you guys. Does Coinbase beat earnings? Is it worth buying up before those earnings come out, or are you planning on waiting until after earnings to make that decision? Would love to get your thoughts in the comments below. And again, just as a reminder, I'll be live to react to these earnings at 3:45 p.m. Eastern time before the stock market closes. So make sure you hit that subscribe button and hit that notification bell because I would love to see you guys there. I'll see you tomorrow.